We are going to study the three major categories of credit, so that we can be able to understand the three types of credit that exist in the market. These three types of credit that exist, we have three types, and one of the types of credit is what we call consumer credit. We have what we call consumer credit. Our second category, we call it exports. We have export credit, and the third category we call it trade credit. Allow me to start with consumer credit. What consumer credit is, I think it's very clear. The word consumer means someone who is consuming, someone who is taking something for the purpose of consumption. So when you're looking at consumer credit, we are looking at that credit which is taken or which is borrowed by an individual for the purpose of consumption. And maybe to explain it further, with consumer credit, what normally happens is that you can go and get a loan for the purpose of buying a vehicle for personal use. That is consumer credit. You can go into your phone and take what we are calling mobile app loans. That is consumer credit. You are taking it for the purpose of consumption. And maybe to even explain it furthermore, we can look at consumer credit as that credit which we get even from the retailer or the small kiosk or the small shop in your neighborhood. So when you ask for that credit, whatever items you are taking on credit, they are for the purpose of consumption. So consumer credit, it's about, we can have the bank. We can look at what the bank offers. Yeah, we will have the microfinances that we see. We will have the SACCOs that we see, and we can even see them in the shops that we purchase items. So the main thing is for consumer credit is all about consumption. We are taking a product, we are taking a service for our own use. So that is the credit that most people dwell on. Our second category, we'll be looking at what we call export credit. What is export credit? Basically, we know about export. We talk about export, we talk about imports and all that. The only difference is this, that it is trade that is happening outside the borders of the country. So the export credit involves an importer who is in a different country and an exporter who is in a different country. So we know that this exporter is out there. When he will be making the payment for this credit facility, he will be making the payment maybe by using foreign exchange. So it is not, will not be paid with the local currency, but with the foreign exchange. Yeah, so that is export. And when we are looking at the export credit, now we know it comes with other types of risks. Somebody is far away, maybe you don't know them, you have just been connected to them by maybe a distributor, by an agent, and you really don't know them. So it has its own risk when we are looking at what we call credit risk. Then our third category that is very important and that really has much to do with our economy. This is the type of credit which is normally given by manufacturers. I know we all know the chain, the distribution chain. We have the manufacturer giving it maybe to a distributor, and maybe from the distributor it goes to the retailer. So it is for the purpose, the credit is being given for the purpose of trading. It is for the purpose of expanding or maybe moving goods from the manufacturer to the distributor and all that. So it is the purpose of this credit is to maybe for the purpose of trading. So if I'm taking, or a business is taking a loan, to trade, that loan, it is not for consumption, but it is for purpose of enhancing production, or maybe you are buying an equipment which will help you in production. So that is what we are calling trade credit. So if you are told this morning by this evening by someone to explain what trade credit is all about, we can clearly say that this is credit that is offered for trade purposes. So it is not for consumption like the consumer credit. It is among traders. It is among traders, and the banks could also be involved, where they are giving funding in form of cash or in form of capital for the purpose of expanding the business. So it is the main purpose of trade credit is to enhance trade amongst traders, and therefore it is a very important aspect in every growing economy. My name is CCP Zipporah Gikonyo. I train I train credit management at Tumaini Institute of Management Studies. This is a subject or a unit and a course called CCP, that is Certified Credit Professional, or at another level called Diploma in Credit Management, a course that is examined by Kasneb. This course is suitable for all who work in the credit sector, be it in the banking, be it in SACCOs, be it microfinance, or be it in the trade industry. All areas that handle credit transactions, a person with this qualification can get an opportunity to offer their services. So this certification will give you an opportunity to be a credit professional, maybe like a credit officer in any of those institutions, or a credit manager. So in case you are a CPA finalist or CCPAK, you will get exempted on some of the papers, and you'll only require to sit for around 8 papers only, and you will get that certification to be a certified credit professional. We have a special offer for you and for your friends, going for only 3,500, and you will be able to get all your lessons from our free school platform, and be ready for your November 2019 examinations. So welcome to AfriSchool, welcome to Tumaini Institute of Management Studies, and learn more about credit management.